Yo, what's good? What's good, everyone? Can you guys hear me okay? Can you guys drop some sevens in the chat if you guys can hear me loud and clear? Happy Tuesday. Super blessed and happy to be here today. It's been an incredible week, to say the least. Drop some eights in the chat for me if you guys can hear me loud and clear and you can see me and the screen just fine. I'm gonna go ahead and just get it rolling for the time being while I let people come in. I'm gonna get this call rolling while I just kind of giving everyone time to come into the call. I usually mention the call out a lot earlier than this. Alright guys, I'm just gonna go ahead and just get started. Alright, so we're gonna dive into the economic calendar. Okay, first, the economic calendar, let me see. Let me just pull it up real quick on TradingView. Get a nice little cutout of it here on TradingView real quick. Okay, so just want to be clear on a few things. Give me one sec. There we go. The music was a little too loud. Okay, yeah, sorry. The music was a little too loud there. But what I was getting into is, in terms of the economic calendar, I will be reviewing it with you guys every Technical Tuesdays. As well as I want to tell you guys, I believe that the best way to really run these calls is a little bit earlier in the week. And of course, it's called Technical Tuesdays, so I'm not going to change it to Monday. So we're going to do it a lot earlier on Tuesdays. So in case you guys haven't heard, we will be changing the time a lot earlier. So in terms of what time I'm going to be switching over to, I believe that the best time to set objectives and everything without it being a little too late for me would be Mondays, ideally, and I do that with you guys every Monday morning. But on Technical Tuesdays, we'll start the call, I want to say 11 a.m. Eastern time. London close. 11 a.m. Eastern time will probably be the time that we'll be tuning in to calls together for Technical Tuesdays. 11 a.m. Eastern time. And I know that may be a little bit off for a lot of you, but personally, I like the live streams that we're having in the morning. Okay, I personally I'm going to, I guess, gravitate more towards the morning. It may even be earlier. It may be as early as 10 a.m. It may be a Technical Tuesday that we turn into, that ends up being like a New York session that we do on Tuesdays. Not sure in terms of what time, but for right now, it's going to be at 11 a.m. Eastern time. Okay, 11 a.m. Eastern time, we'll be starting the call. So I know that maybe a little bit later in the session, but again, we'll work on it together. We'll work and see what suits the viewers best. So as we're getting into the week, Monday was very blank. I will be reviewing the news with you guys, but like I said, it will be Mondays and Tuesdays, and unless we have it throughout the week. But I will only be reviewing red folders. Okay, just FY, I will only be reviewing red folders and holidays, and go more into detail with USD. Okay, but just being aware of Canadian CPI reportings. Okay, on Tuesday. Tuesday was at 8:30. Okay, this morning was the USD CAD had a nice. We'll go over it if anybody trades forex. Okay, but then after that consumer price index for the USD CAD, for the CAD, okay, for the Canadian dollar, we have this USD consumer confidence report. It You guys can even look at it. It happened at 10 a.m. this morning. 10 a.m. was this candle. That's really when the movement started coming into the market. So it was a really, really great time to hop on the charts. Yeah, it was a really great time to hop on the charts. Okay, so besides that, AUD, okay, at 9:30 p.m. just barely hit. Okay, while we were starting this call. Tomorrow, the pound at 9:30 a.m. Hey, beware if you trade cable. This is something that I would be aware about. If I don't even trade the pound for me to tell you that this sounds like something that may have a pretty significant impact on the market sentiment or the market movement volatility for the day. So if you are a cable trader, there is a pretty good 9 a.m. to 10 a.m. window that you're going to see there that I wouldn't miss if I was a cable trader. Okay, the yen and the US dollar also have news at 9:30. So again, cable traders, GVP USD, both have 9:30 a.m. news tomorrow morning. Okay, we will be looking at some forex today. I haven't looked at forex in forever, so we will be looking at forex today together. And then in terms of Thursday, guys, Euro USD, some more CPI there. Okay, prelim. I'm pretty sure this isn't like the full CPI report. The CPI will probably look a little bit more like that delivery, where it's like 3 folders in a row. This may be something prior to Euro tomorrow. That's all day. USD, again, 2:30 a.m. Eastern. That is a really weird time. This may be just when the news are released. I don't know if this is actually when this guy's gonna speak, or Federal Jerome Powell. 2:30 a.m. seems very abstract for Eastern time. Federal Jerome Powell to be up. Either way, Euro bank holiday all day. So Euro Italian bank holiday. I don't know how much effect a Italian bank holiday will have on the euro. That's for you to decide. There is USD and euro news tomorrow, and personally for London, that does look like something that may have a significant amount of impact. So if I am looking at London or cable and euro traders, there's bound to be something very interesting happen in the next few London sessions that I'd be aware of. If anybody on this call is a London session trader, I advise you to remain on this call throughout, and you'll find the model that's very simple to follow throughout London. I'll show you guys here today. Okay, so USD at 8:30 a.m. These are the types of days that I take trades after 10 a.m. These are the types of days when I deviate from that. So a lot of these 8:30 a.m. Eastern time, that's ideally the time that you want to be on the charts. By 8:30 a.m. Eastern time, you want to have an idea of where you want the charts or the market bias to be towards. Okay, by then you should have a pretty good idea. If that doesn't clear up by then, wait till 8:30. 8:30 tends to be a lot of news release, even the ones that don't fall on the forex calendar, on the forex factory economic calendar. Okay, not always will you guys see all the economic news on this page. So with that, understand that 8:30 a.m. is when a lot of USD news are released throughout, regardless whether they're reported or not, on this economic calendar. Okay, so if you every day, if you're not looking at the charts prior to that 8:30 a.m., I feel like you're doing yourself this justice by showing up a little bit too late. Now, I that doesn't mean I watch the charts from 8 a.m. all the way to the open to like 10 a.m. That's a 2-hour window. No. But by 8 in the 8 a.m. to like 8:30 window, I do look at the charts and I already have an idea what I want to see. Okay, so just to be clear, and then I'll glance at the charts on and off until we get closer to the 9:30. At 9:30 open, I do stay on the charts. That's the moment where I'm like, by then I'm on the charts and nothing's gonna get me off until my time period is over for my watch window, I guess you could call it. What would you call that? Yeah, my window to watch the markets. Yeah. So and what does that window end? It's actually 11 a.m. Eastern time. That's my window. I don't look at the market much more than that. If I do look at the market beyond that, it's rare. Okay? So anyways, we're going to go with the DXY, and also we're going to hop over here because I haven't looked at these in a while. So we're going to go over here, look at the DXY, okay? And we're going to go over these as well. So guys, again, in terms of the dollar, this is kind of where we've been at for the past few days, months, weeks. When is your time period over? That's a really good question, brother. Yeah, like I said, my time period is from to watch the market. So my time period to watch the market is from 8 a.m. to 11 a.m. My period for execution, and this is without counting like news, is from 10 a.m. to 11 a.m. That's like my prime window, my golden hour, you could call it. ICT calls it silver bullet hour. Okay, but that's mine, as that's definitely mine as well. And given that, so yeah, given that, I start trading before 10 if there's news. Okay, if there's news at 10, I'll even trade before 10. If there's news at 10, I'll say that again. If there is news at 10 a.m., I'll still trade before that 10 a.m. Okay? But if there's no news at 10, if there's no news before 10 a.m., at 10 or before 10 a.m., I will not trade before news. I mean, I will not trade before that 10 a.m. I won't violate that rule. Hey, Nestor Ramirez, that's 5:30 a.m. for me a little, but I do waking up for that and watch it and trade aftermath. You going live for that tomorrow? So no, I won't be going live for any calls other than the market mentorship on Thursday, or any more calls that Matthew is throwing out. Because for the most part, for the remainder of the week, I am focused on my 6-month mentorship, and I do private calls and live streams for them. And so I do the live streams that I can for Inner Wealth YouTube for free, and then I do what I can as well for my 6-month mentorship when I'm not live on here, if Abundant Capital is not on. Okay, so yeah, this is all EST. Always. Whenever you guys see me throw out a time, if I don't throw an EST in front of it, just know that I may not live in EST time zone, but spiritually, mentally, I'm there. So my computer's set up on EST. My devices are set up in EST. I don't know. I like it. Okay. Anyways, yeah, that it may be early for some of you, but you got to understand this. You have to make up in numbers where you're lacking skill. So if you right now are not profitable, you can't afford not to wake up at 5:30 a.m. That's the thing. It's if you yet to reach profitability, you don't have the luxury yet to be sleeping in, right? And so I'll give you an example. like my biggest sacrifices were at when I was doing some dumbass over trading, and I was trading London and New York. I was trading my own personal account, and I mean, I learned the hard way. I love that experience, and I loved how much I sacrificed that year because I learned a lot, both London and New York. And it was, I would sleep during the day, then I'd wake up. I'd fall asleep like around like 8 p.m., 7, while people were going out. Friends were asking me to go hang out. Hey, let's do this, let's do that, watch a movie, girlfriend, family, kids. I'm telling you guys, it's not, I may not talk about it, but I have kids. I have 2 children, and a 12-year-old and my 8-year-old. And, and then my wife as well. I have a life as well that I have to maintain. And a lot of that got sacrificed. A lot of time with my loved ones, with the closest people to me, got sacrificed because I wanted to sleep. So I would fall asleep around like 8 p.m. Okay. I guess not in Eastern time. So it's 10 p.m. Yeah. So I'd fall around like 10 p.m. Eastern time. And then I'd wake up around 2 a.m. Eastern time. And I'd wake up for pre-London. And I'd run it up. And I'd run it up from like 2 a.m. to like 4, 5 a.m. And then go to bed for like 2, 3 hours. And then I'd wake up like for New York. And then I'd run it up again. And I'd do it. And I do that back to back every single day until the weekend. And then I'd have like a regular kind of schedule. But yeah, I was really obsessed with this game right off the bat. Maybe not the healthiest obsession, but I learned the hard way. Okay, I'm not saying that you have to do that, but I'm saying that it did teach me a lot. Because even though I was over trading, I was journaling everything. And my intentions weren't to like over trade or anything like that. My intentions were to calm it down. So after I want to say like 6 months of doing that, after like 6 months of doing that, I stopped. I toned it down and I cut down to just one session. Then from trading in one session, I toned it down to like a 3-hour period. And then from like that 3-hour window, I toned it down to a fucking 1 hour. And throughout that 1 hour, I just look at the market throughout 15-minute periods. It's just like you build this system that works best because you know how to time the market. You know the candle closures are important. You become accustomed to looking at 4-hour closures, 4-hour opens, daily closures, highs, lows. Like you become accustomed to seeing all these things every day. So it's over a period of like just trial and error, and just doing it every single day. Not trading every day, but showing up to the charts every day, studying price action, document it, journaling it, learning from it, rinse and repeating it. Like that right there, if you do that, if you can do that for 6 months, I promise you that you lock yourself in for 6 months, say fuck everything else, fuck every distraction, you will be so far ahead. I promise you. Like, I speak to all of you, okay, everyone here. If you lock yourself in for 6 months and shut everything else out and just commit to yourself for 6 months and documenting, becoming systematic, and showing up every single day to the charts, you will get way ahead of more in the game than any mentorship course, fucking live streams, whatever. It will be the biggest growth spurt in your career. I promise you. No mentorship, no one-on-one, no fucking course will ever give you more growth than that. Solitude and commitment for just lock yourself in for 6 months. What I like, something I really like about my life recently is that I've adopted a sense of seasonality. Like, I'll go through my seasons of creating content. I'll go through my seasons of studying Forex. I'll go through my seasons of just being on vacay and free and no commitment. I'll go through my season of growth. I'll go through my season of pain and disappointments. I'll go through my seasons of troubles and challenges. I'll go through my seasons of growth. I'll go through my seasons of happiness and joy and bliss. And I notice like my life goes in constant, and I treat my growth and my business in seasons. And I feel like that to an extent is can be a healthy habit to carry out in trading. It's not healthy to be like putting in all this time and fucking cutting everybody out. I mean, it is, but at the same time, some people cannot handle that mental stress. So make trading something easy and blissful to follow. If it means a season of grind, then grind it out for a season. It beats a season of no grind, right? So, anyways, as we dive into the charts, guys, I just want to say, price has been compressed for a couple of months. Ever since we got into this level of support, like we've been just kind of compressing price action quite a bit. Okay, quite a bit of compressed price action. Let's kind of look at the 6 month at the 6 month. Okay, and you guys can kind of see that a lot better right there. A nice bullish higher high, higher low, lower high, lower low, right? Failure to come lower. We got a nice tap into this insufficiency. We come into this mitigation block right here, the high of that mitigation block inside this imbalance, right? And then we come down, create a higher high, take out this high, and you guys can see that very nicely. Now let's go to that 12-month. We're kind of doing this backwards a little bit. So you can see where we got this rejection, but honestly, after we took out all these lows, you have to look at yourself. Lows, there's no high, like the only highs were right here. You need to look for premium liquidity. This could be your premium liquidity that could take it down. It is a thought that, but personally, I think that we could be pushing up a little bit higher in terms of the dollar. So I'm bullish on the dollar. Let's look at the 6-month. Yeah, we did come into this insufficiency here, but personally, yeah, I think one more tap up higher above this high. 3-month. Yeah, there is a chance we could come lower, of course, right? But for right now, given this current imbalance, the 2-month here, the mitigation candle here that you're gonna see a lot more clearly on. Let's look at the 3-month there. Yeah, this mitigation candle, this was a failure to create a new low. So you have a mitigation candle right there. We could go a little bit lower, but for now, I think personally we're gonna see a little bit of bullishness. Right, we still have the equal lows, but this imbalance really gets my attention here. That imbalance there on the weekly. So I want to see us get back into that area before we continue to fall. If we continue to fall, because again, we could be accumulating. We have to take into consideration where we're at. We are 50% or below. Okay, we have taken internal liquidity and we have came into a previous area of accumulation. Right, so since we've came into this previous area of accumulation, we can look for some evidence. The evidence here was a previous daily opening gap, previous weekly low, and then a higher high here on the daily. Okay, now since we started the week, we've traded down, created this insufficiency on Monday, traded down into this last push up. This would be considered your breaker, right? This is the break. Okay, so this would be considered this whole up push here. This whole up push is your breaker. That whole up push right there. Okay, that's your breaker. All right, so you have your breaker, insufficiency, and previous daily opening gap right there. Okay, and you guys can see it a little bit better. It's between these two. Oh, it's between these two, sorry. These two. Okay. So, you guys can see that we dipped down there. We took out internal liquidity on this range. So now let's measure this range here. Okay. In 50% and below. We took out that internal liquidity there. Respected that gap overall. So me personally, I am looking... Whoa, my voice left the room for a second. I am looking for longs into these areas here. So yeah, yeah, these longs look very attractive. Previous daily highs, of course, targeting all those areas. So earlier today, if you were on the sessions yesterday, I mentioned we could short off to this internal liquidity level. So this morning, I wanted to see some longs. I shared this on Twitter, but I wanted to see some longs out of this area. You can see the longs a lot clearer on the 15-minute. So they ended up accumulating very nicely here. And honestly, this insufficiency ended up holding it down quite well before we came back down for before we came back down for anything. I mean, we didn't come back down for anything at all. We may come down for that breaker still. It's has yet to be determined, but for me, yeah, this is more than necessary to continue pushing to the upside from here. So the 1 hour looks very attractive to break this counter trend, give us a nice break here on the 4 hour, and then just continue pushing to that upside. So we've confirmed the weekly accumulation. We confirmed the internal liquidity within that weekly accumulation. Now we've confirmed a strong level of support by a shift in structure that has taken place here on the daily time frame. Okay, you guys can see that shift in structure a lot more clear right here. I want you guys to really understand this whole bias. Okay, why I've been fucking shooting for those highs for so long. But hey, we'll get there. Okay, so accumulation off the weekly, accumulation off the daily. Okay, shift in structure here, clearly giving us an imbalance, breaker, gaps, and now on the 4 hour, in about 1 hour, we'll see if we get this accumulation confirmed. So something I like to watch is the 4 hour closures. Okay, for reaccumulations and redistributions, the 4 hour closures, those retracements, when the 4 hour breaks, it's a 50% and below, and then breaks. That's a pretty good confirmation that you're still and we're still where is that where is that Fibonacci? We're still really low in the range here. I don't know why that's not visible throughout every time frame, but yeah, we're still 50% and below. So even if the 4 hour accumulates here, within that higher time frame range, we're still 50% and below. Within the daily range, of course, we're a lot higher. But even if we don't continue to pump up and we're not 50% and below anymore, I believe that the targets are still clear. So we'll let price action do its thing tomorrow, right? We got a nice shift in structure, nice bias. The shorts were clean for the beginning of the week. The longs today took a little too long. Too long. Yeah, the longs took too long. Yeah. Okay. Let's review Euro. Okay. I haven't done Euro in a really long time. I think it's time to do some Euro. Okay. If you don't know this, a little background on me. I started with Forex assets. Okay. I listened to that was probably one thing I did listen to at first was start with the majors. Things that you do listen to. Start with majors, right? Yeah, I started with the majors. I started with Euro USD, GBP USD, and USD CAD. Those were is it just me or is the live lagging? If it is lagging, let me know. Drop some 8s in the chat if you guys can hear me loud and clear and you guys can see the stream and my screen okay. Drop some 8s in the chat if you guys can hear me loud and clear. Cool. Cool. Cool, guys. Might be a little pause there for a second, so I apologize, but cool. All right. So, just so you guys know, I started with yeah, I started with the majors. Majors were my thing before I got into anything else. So, I'm happy to break this down and come back to my roots. Sometimes, bro, honestly, sometimes all you need to do is get back to the basics. Sometimes all you need to do is get back to the basics. What do you guys see here? I see something about to pop off. Something about to think. Because, okay, if we're anticipating DXY to accumulate from here, to take out these highs and start taking out this liquidity, what do you guys, if DXY goes up, what can we anticipate Euro USD, GBP USD to do? We're going to anticipate some drops, some big drops on them, right? Okay. So now, if we anticipate the DXY to accumulate, come into this bearish area, previous area of accumulation, either here or here, and continue to these lows, okay, then we can anticipate Euro USD to continue to move to the upside, okay? So sometimes the best thing you can do is follow the asset that looks the clearest. Sometimes Euro USD will be the one that gives you the bias for your DXY. But most times, I want you guys to focus your sentiment from DXY and transfer that over to Euro USD. If you guys are starting to see DXY go long, then anticipate some shorts on Euro USD, okay? So looking at this on a monthly on a 12-month perspective, we have dipped down here and gone like capture all of this right here. Look at that. Look at the way that we filled up this insufficiency here, okay? The way that we filled up this insufficiency. Look at the low of this. Wait, let me see the low here. 358, 358 or no? 95, 358. 95, 480. Oh, wow. So that low, this low, look at that. We came to that low. We came back down to that level, filled up imbalance, came back to that level. That level stopped it dead in its tracks, and we pushed, have been rejecting to the upside. Let's look at the 6 month. 6 month looked like we could potentially move up higher. We did end up breaking on the 6 month here though. So notice we came into this previous area of distribution and then dropped into this previous area of accumulation. I say a little bit more evidence needs to come in terms of Euro USD, but the longs from here do look kind of attractive. Okay, I'm not gonna lie, the longs from here do look kind of attractive, at least to like, you know, this order block there. Okay, on the 6 month. Let's go to the 3 month. 3 month lining up pretty nicely. There's a nice insufficiency there that we've traded into currently. Okay, there could be another imbalance here that we traded up to later on. Here on the monthly, we've been climbing up pretty steady, higher high, higher low, higher high. Beautiful price action in terms of bullishness. Okay, weekly gave a nice distribution to the downside, came into a new daily opening gap, okay, or a weekly opening gap there. Beautiful price action delivery again. Just watching price action do its thing. But really, for me, I would love to see some more longs into these equal highs here, into this imbalance, and essentially up to that order block that started this whole push down, this whole push up. Right, that would be my first objective. See how what we do once we get up there. But for now, the longs just make the most sense. In terms of the weekly, so monthly. Okay, if I had to say monthly, these equal highs have all my attention. In terms of weekly, come on, why do you do that? There we go. Okay, in terms of the weekly, previous weekly high. Actually, this previous weekly low right here, if we are going to go bullish, I'd like to see, for me to figure out, sometimes for me, my weekly objective, sometimes it takes me to get back to the smaller time frames for me to really get that objective correctly. Because sometimes on the weekly, it may look like we're just going to continue moving up. And you can confirm that a little bit better on the daily here. So far, it does look like we're just going to continue pumping up to the upside here. But there's just a lot of liquidity right here that was built up as it is. So within this whole range, between this high and this low, there's not much liquidity, right? Other than this right here, previous daily high. That's the only liquidity level that I see. And personally, then if you go down 50% and below, the only liquidity level that you see here is this one. So if DXY, we're seeing DXY pump to the upside, then we can see that why euro is getting this rejection to the downside. Now, check this out. Let's look at the levels here. So this high over here was taken out. Okay. That may be Wednesday. Yep. Okay, cool. We take out this liquidity here, right? I want you guys to notice something. Look at the way we pushed up here, where the manipulation kind of started. Okay. We pushed up here. So if the manipulation started around that area, look at that area. I want you to look at this area that started the manipulation to the upside. And then I want you to drag that attention over all the way to the right. 50% and above, you have this imbalance in this previous area of distribution. Again, we don't have to dump from here, but for me, it does look very likely to take out, because we already took out our previous daily high. It seems very unlikely that we'll return to the previous daily high one more time before dumping. This previous area of distribution, you guys can see, look at all that mitigation. Okay, we break, and then we come right back. No chance of imbalance. We create an insufficiency here, we come right back, cover that insufficiency, we trade down, come back up. Notice all of that. We came back to this insufficiency and covered it as well. So that just kind of shows you why I was showing you guys that, is because that's a really good way that you guys can tell, like, we're not gonna fill up the insufficiency entirely, because look, this is the closure of that insufficiency. Okay, because a lot of people ask me, like, how can you tell when we're gonna fill up an insufficiency all the way, or yeah, when we're gonna fill up the insufficiency all the way, or when we're gonna fill it halfway or partially, or just tap into it? It's a really good question. And what I can tell you is, like, if I'm looking at, let's say, a certain time frame and I find that insufficiency, I'll go one time frame lower and just kind of study that price action and see how it was delivered within that. 1 or 2 time frames lower, just study it, and you can see that even though the low was closed here, you can see that we traded down. We've really did trade down pretty low and then higher and came back. And so that price does look very balanced for me to just go down. Look, we'll go on the 15-minute. I'm sure it'll look a lot more clear. Down, up, okay, up, down, right? And so you can see that whole area has already, we came up here, we mitigated out of this whole push up already, 50%, cool. Then we came up here, mitigated out of this area, cool. And then so to me, that area was already played out with. The only unmitigated area you can kind of see is right there, but besides that, you can tell the 1 hour says it all right there. Traded up, down, up, down, up, down. Nice and balanced priced, or rebalanced priced. Okay, So in terms of shorts, I'm looking at shorts for Euro USD, the longs. So throughout Monday and Tuesday, we've been looking at DXY shorts. And so just kind of looking at the way New York came in down, right? Covered the new week opening gap right here. Cover the new week opening gap, right? Then we create a higher high away from that area, creating that shift in structure. Then we come into this nice insufficiency here and just kind of hold that area down. Then of course we get another higher high. Right around London we come back down. Look at that. Right around the London Open. Comes back down. Create another imbalance before that. Okay. Then what happens? And we get New York coming in at 5 a.m. New York opens at 5 a.m. Eastern, right? I'm not sure. I honestly, that's a really like horrible thing for me to ask, but I'm really bad at the, because I haven't traded forex in so long. I can honestly tell you I'm really bad at that. I always get it confused with like 5 a.m. or 6 a.m. But you can see here, we come down. Nah, it's not 5 a.m. Of course not. It's 5 a.m. for me. That's my time. See, that's where I always get it confused. For sure. Okay, so imbalance. Price pushes down. Then we continue to move to the upside. So price has been moving up to the upside pretty nicely. Again, I will not be surprised if we just dump. Okay, I will not be surprised. So just kind of looking at anticipating some shorts. We got a lot of liquidity to the downside. You guys can kind of do what you need. I'm not a financial advisor, but go do what you do with that information. I'm not gonna dive into GU just because I haven't been a fan. Okay, so we'll dive into Euro USD. We'll leave everything else kind of as it is. We have a lot of objectives, a lot of things to do and to look forward to. I think that we can melt down pretty hard. We don't have to melt down all the way for you to make a profit. Just remember that. We do not have to melt down all the way for you to be making a profit, okay? So, and let's go dive into the indices. Yeah, I mean, this upside liquidity definitely got rated here. We can definitely come up higher one more time, right? Because we also created very equal highs here. Okay, so in terms of monthly, just kind of still looking at more upside movement. Doesn't have to happen right away. It could probably take its time. Okay, and then for the weekly, sorry I skipped over it kind of fast. You guys can see that equal highs. This is why I need to refresh all my markups before every call, because sometimes I'd be skimming through stuff because I already have it marked up, and it throws me off thinking that I already went over it. So I was initially looking for weekly internal liquidity here. And then we got the new weekly closure, and so my weekly buys went from here to here. And so that was my overall weekly objective for the start of the week. We hit it fairly fast, of course. Monday comes in, smacks it, and then we end up pulling away from it when I imagined we would have came down lower one more time, and that was not the case. We ended up using this daily gap here, right? Remember that daily gap that I was mentioning? 50% and below, internal liquidity, daily gap, nice overlap of all of these things. So yeah, we can potentially see some longs into this. If this is our daily break to the downside, then we can look at this whole daily range, and you can anticipate some at least coming back into premium for the week. I would be really fucking shocked. Sorry to excuse my language, but I would be really shocked if I'm going to be extremely shocked if we do make it all the way back up here. So my first objective, I'll tell you guys, will be that order block there. That previous daily high first, of course, but that order block gets my attention. Okay. That one right there. I know that's pretty big, but that draws my attention first in terms of the daily. So, we have a daily insufficiency here as well. That's this right here, this gap lines up really well with this imbalance right here. And so we'll see what happens there, but I'm looking at this level as maybe as a level of support for price to continue pushing to the upside to these objectives. So I'm going to be looking at these areas. I'm no longer going to be paying attention here yet. I'm going to leave them there because they may be future objectives. Given that DXY again is pumping to the upside. Now, indices don't have to just dump because the DXY is pumping, but it would complement the bias, right? So we're gonna let that kind of be there. We have that gap here, and order block. We'll see how that's gonna play out in terms of Dow Jones. Okay. In terms of Monday and Tuesday, though, okay, Monday created that imbalance here. All right, and honestly, I wanted to see some shorts out of there to smack these lows. Right? I'm not sure which one I went. Which one did I trade yesterday? I think I traded NAS both yesterday and today. Sorry about that. Markup is already spilling it. Okay. So, price action was very compressed Monday. It just created a lot of liquidity, but most importantly, it created that imbalance. Okay? Created that imbalance on the daily right there. You guys can see it. And again, I really like that overlap. How it just kind of overlaps together very nicely. I really like that area. Okay? I'll not be surprised if that's where we go. So, price action ends up pumping to the upside. I wanted some distributions out of this area across the board. Now, one thing I did notice is that Dow swept that previous daily low, so Friday's low, okay? And then left this low intact. And then NASDAQ didn't just take that Friday's low, it took that previous weekly low, okay? So NASDAQ came really low, and came low, so low that I know that some of you saw this on my Twitter earlier today, or this morning. You guys saw this insufficiency here. Okay, this got closed completely. So now let's go to the daily. In the daily time frame, the imbalance was shut completely right there. Then we get a very strong rejection, engulfing candle to the upside on a daily perspective. And this is where I got a little messed up because I honestly wanted this low one more time. Okay, now I think NASDAQ could give us that low. Okay, I'm still thinking that NASDAQ could give us that low. I'm not going to lose hope on it, but there is divergence between NASDAQ and Dow. Okay, so Dow ended up pushing to above and beyond previous daily highs, and then NASDAQ ended up staying below previous daily highs. So what does that tell me? Maybe NASDAQ needs a little bit more downside liquidity before we can call it good to run for the bulls. Okay, so I'm not going to give up on that low just yet, guys. We're going to leave it there. But of course, I'm looking for overall longs out of these areas. Now, NASDAQ, like I said, could dump. Could dump one more time. That's Monday's low. Like, I would hate for that one to be the low of the week. But I'm going to be hopeful on NASDAQ and Dow divergence that Dow Monday of the low of the week may be set. Okay, Monday low of the week may be set. And then I'm going to be hopeful that NASDAQ may still have a low to come for the week. So we'll see how that ends up planning out. But in regards of DXY, because I wanted DXY longs, okay, out of this daily, you guys can see it here a little bit better. Out of this daily imbalance gap and all that stuff that I mentioned earlier, because I wanted that accumulation out of that area, I was looking for indices to short. And you guys can see, like, that was the opposing of what ended up happening today. We ended up longing pretty freaking hard. Excuse me. I don't know why my nose is running all of a sudden, but anyways, okay. And so I was really shocked by the longs, but at the same time not, because of the divergence. So, and not just that, but shout out to my boy Harold. He also pointed out that on a daily on NASDAQ, we were already 50% or below. So shout out to my boy Harold for pointing that out to me. I didn't notice that. I pay attention so much to Dow that I forget to dissect NASDAQ and SPX that way. That's something that maybe you guys can keep me accountable for. Like, if you guys don't see me showing them love, like, remind me to show them love, because they do need to the same level of attention and analytics that I give my favorite asset and versus my least favorite asset. They should all be treated the same. There should be no like sentimental value to either one, or higher significance to one asset than the other. So anyways, we get down here on Dow Jones. We end up longing pretty hard. I'm going to go over the trade that I missed, okay? So we end up trading pretty hard to the upside. So I'm going to show you guys here this divergence, okay? We come into this previous daily opening gap, okay? And then that divergence really came after, at the beginning of the day. And so before the day even started, the divergence was taking place. And so you can tell that Dow was obviously going to be a bit more bullish than NASDAQ, given that Dow had already taken out that downside liquidity on the previous daily low and failed to take out a new low. Like, NASDAQ took previous weekly low. Dow didn't take previous weekly lows. Dow did that on Monday versus NAS did it I guess Monday too. Interesting. Yeah, you know what? It's just that NAS dumped so much harder. You could just, even though, yeah, we both got lower lows, the way that NASDAQ dumped showed that Dow had a reason to not want to go any lower. So I like the bullish sentiment. I liked it even more after this 10 a.m. opened. 9 a.m. again, guys, back test it, okay? 9 a.m. back test it. But let's make sure that we know everything here. We have this beautiful breaker here on the 1 hour. Okay, so after 10 a.m., after news hit, you guys can see here on the 15-minute, we have this insufficiency, the 1 hour breaker, right? So you have the overlap there of your two confirmations, stop loss below the low of the imbalance. You could have been targeting that daily insufficiency again for a 103. Okay. I'm not sure where else I would have partialed out, to be honest, asides just probably that high before we got into that previous area of distribution. But that's probably it for me today. For me, in terms of the longs, I would have loved to hold it to the previous daily high. My broker doesn't allow me to hold trades, so I would not have been able to achieve that, unfortunately. I would have been closing it around this time at the end of the day. But no, that long was beautiful. Shout out to you. I want to just give a shout out to Harold on that, because he called those out. They were beautiful. For me, because the DXY, I was looking for DXY longs. I was looking for, obviously, some shorts out of indices into those really ugly ass lows. So I was looking at this imbalance here, okay? And I was looking at this low right here that started that whole push up. I was really looking at that low. And so you guys can kind of see that we come into that low with this, we come into that low and this imbalance, you guys can kind of narrow it down a little bit more here on the upside. Okay, and given those two levels there, okay, after 10 a.m., so 10 a.m. candle hits, 9 a.m. gets taken out. Okay, 9 a.m. high, and then let's note the 9 a.m. low too. 9 a.m. low. Okay, and you can even look at the initial low of New York. Okay, so once we took out that Asian high, or we took out that 9 a.m. high, and we came into that order block, okay, price action was obviously showing signs of distribution on the 5-minute, but we got in a little bit before that. Okay, as soon as 9 a.m. got swept out, because I was looking for shorts and DXY was longing hard, I was looking in here. After that 9 a.m. high got taken out, okay, you guys can see how these levels, like, look at that. This is an order block. This is like a daily order block. Okay. Okay, that's like a daily order block right there. Okay, that we're coming into. Look at how you can use these levels again and again and again. Okay. We'll put the level here. That's where I closed my trade. So you guys can see here. Okay. We have imbalance. We have order block. Okay. And of course, that's where I entered. But of course, if that didn't feel comfortable enough for you to take, the 1 minute gave out a beautiful, beautiful re-entry. Okay, after we hit all those areas, we could push down, created that insufficiency there, and boom, nice entry point there, and it melted to the low. Okay, so I got in on the 30-second and then got in back there. This one was a little too fast for me. I didn't get in a little bit lower, but still, nevertheless, like, I both took, for the most part, I closed. So I had 4 contracts in there overall, and at first I only had 1, so I was able to squeeze in another 3. So once this price action dropped into that area, I immediately closed 3 trades, and then, you know, went break even and was aiming for this low, that previous daily low. And, you know, we just didn't get it. And that's what's cool about trading is, for example, me and Harold were on the same call, and he was going long, I was going short. Matthew was going long at the open, and I was looking for shorts overall for the day. So Matthew went long, right? Profited, hit, take profit. Harold goes long on Dow Jones, US 30, okay? Hits, take profit. I go short on NASDAQ. I'm able to hit profit. Guys, no matter which way the market is, as long as you follow a nice system, right, over the period of consecutive amount of trades, over the long period of consecutive amount of trades, you will see consistency and profitability. But you have to have a system. Okay, you have to have a system in your trading. Okay, no matter which side you played today, they both played out. As long as you, 1, managed accordingly, and 2, most importantly, probably, trust yourself. If you trusted yourself, today was a bag. Okay, that's probably like the number 1 thing I tell my students all the time in the 6-month program is I help them build the trust in themselves. And most people have difficulties with that, but we build trust in a system, and so that way you can trust the system and therefore build more confidence in yourself. So it's a 2-way street there. That way you can improve your trading plan, improve your business, improve yourself. Okay, so I have not looked at the chat. Thank you. Yep, super clean price action today. Yes, honestly, this was a really nice trade for me. I know it just looks very simple, but it was a banger of a trade. And then price action does what? We get the manipulation pushed down to the downside right here. Look at this down candle. We get imbalance. Okay, this is balanced price action. So below here, price action would ideally have to respect if we want to hold this line of bullishness. Okay, we get down here one more time. Not just that, but look, we get back down to the liquidity level one more time. I actually was looking at these longs. I was going to add very minimal risk because I had already taken my setup for the day. I was going to add very minimal risk right there. And I was dead ass going to be done for the week, probably for the whole month. Because, yeah, no, that thing popped off. NASDAQ was like, yo, Dow Jones, let me catch up, bro. Because, damn. Yeah, that shit popped off. Anyways, any questions, comments, or observations, guys? I'm gonna go watch that Spider-Man movie. I watched the first one. I haven't seen this one, so I'm looking forward to that. I'm gonna go after this. JK, I'm not going after this. My movie starts at 10 p.m. I hope that movie's not long, but I heard it was like 2 hours. So I love late night movies. I know I suck, but I love movies. I know I suck at staying up late, but I'll fight for this one. Anyways, guys, I don't see any comments, questions, or observations. I'm going to let you guys go. I want to give you guys, the last few of you that stayed and hang on tight, here are the details, okay? The new details in regards to the giveaway. I know I was deciding between 220Ks or a 50K, and I've decided that I'm gonna go with 220Ks. That way I can reward more individuals. Okay, the reason that I'm also gonna go with the 220Ks is because that's the first account size that, I guess, not first, but that's the account size that when I hit rock bottom and I had nothing else, it was like the moment of you either, like, I had already had some levels of profitability, but I had lost a lot, most of my accounts, and so I had nothing, and I got to this point where I was like, okay, look, I'm gonna just like buy 20Ks, and I bought this 20K. I bought two 20Ks, not at the same time. I failed the first one and bought the second one before, you know, the other one could be up, and so I passed the second one, and then on that one, because I didn't care about like the profit, because I wasn't looking to make money out of it, like I really wasn't, guys. I was not looking to make profit out of this 20K. I was looking to learn from it and to grow from it. And so the moment I realized that I needed to detach myself from the money was the moment that I started trading that 20K. I detached myself, because to me, the 20K back then was just like, oh, I can just buy another one, you know what I mean? And so I detached myself from like this fucking desire to want to be a six-figure trader and chasing that six figures with great levels of disappointment. And then it just settled down, started learning on a 20K, started really dialing myself down on a 20K, found consistency. I stacked those two 20Ks, ended up with a 40K. I added another 50K, ended up with the 90K on my Forex funds. And then I ended up adding on another 200K to that equity. So that's really like that turning point for me. From there, from my 20K, it was only up until I got over $250,000 in funded equity. Okay. A lot of you may know what happened to that. That's a story for another day. But now I'm up to $150,000 in funded equity. I will recommend to anybody who isn't a funded trader or who doesn't know about prop firms to learn about them, to get plugged in with them. And yeah, guys, now we're here. So anyways, that's how it goes, man. That's where the 20K comes from. I feel like 20K is powerful. Learn to let go of the outcome. So all the details, I'm going to be releasing a flyer throughout this weekend. All the details will be released on Monday's live stream. Okay, I'll release a flyer Mondays morning, The trade room live stream will give you guys all the details for the giveaway, how to qualify or enter the giveaway. It's not gonna be so crazy, some crazy ass. It's not. I'm still trying to figure out the details to make it very simple, like a 2-3 step process, very simple to get your name in the giveaway. And we're I'm thinking of whether I'm going to make it a limited amount of entries. That way, like, let's only have 20 entries or 30 entries. That way, your chances of winning are a lot greater than 1 out of 60 or 1 out of 100. It's like 1 out of 30, 1 out of 20. That's a lot better chances. So, anyways, we'll leave it there, guys. Catch you guys on the next one. I appreciate you guys for tuning in. Again, much love to all of you. Have an amazing rest of your week. You guys got the targets for the weeks. You guys got this, overall objectives. There's liquidities. There's a lot of stuff all around that is looking like it's building up pretty nicely for us this week. We'll see how price shorts or longs. Okay. And yeah, guys, I'll talk to you guys soon. All right. Have an amazing Tuesday and the rest of your week. Peace.